Good morning. I'm Malcolm Graham Wood, and I'm here at Core London for my regular C-suite interview. My guest today is Chris Zielicki, who is the non-executive chairman of Angus Energy, and I'm actually delighted to welcome him to his first interview with us. And we've got lots to talk about. So, welcome, Chris. Nice to see you.
Good morning. Thank you very much.
First of all, if I may, and this is normally what happens on these sort of interviews, is that just in case there are a few viewers who don't know too much about Angus, I wonder if you could possibly give a bit of an overview on the company just to start us off.
I'll do it in a very short way. Angus is the largest onshore gas producer in the UK. Its main operation is in Salt Cleeby, not far from Grimsby. It's also has some operations in the south, Brockham being one of the oil fields in the south of England. We started producing about 2 years ago, and we formed a very, very effective operation over those sort of 2 years. We're now in the process of sort of looking at ways of trying to increase that, which I'll talk about a little bit more later, maybe. And we've stabilized our financial position through sort of basically restructuring some of our debts so that we're now in a strong financial position.
So thank you for briefing us about Angus, Chris. Right now, I'd like you to put maybe that into a bit of context, where you see the UK domestic gas business at the moment, and within the the energy requirements of the UK.
It's a fascinating topic. At the moment, 75% of total energy in the UK comes from oil and gas. And 42% of electricity, and about 24 million homes are actually heated through gas heating. Now, this is, even though we are seeing a huge acceleration in renewables, which is a very, very good thing, absolutely support that. But the situation won't change. It's going to take over the next 5 to 10 years. In fact, gas probably will actually increase a little bit. And we're seeing sort of gas being very much part of the future, at least in the short term, the future of the UK. At the same time, you've also got gas being part of the electricity generation. Now, there's a few factors which are very, very important to note. The first one being that the electricity generation will need to increase. One, because we're actually replacing petrol engines with electricity, and that's going to mean an increase of at least 10%. And then on top of that, you're actually talking about data centers, AI, all those wonderful things which the government now is pushing. And that's going to increase electricity by at least another 10%. At the same time, the grid, as far as sort of the electricity generation grid is concerned, is still very, very old. And it's going to take a long, long time to increase sort of the capacity of the grid. You can imagine digging up almost every single road in the UK to basically install more wires, more electricity. As a result, what you're going to end up with is a situation where, number one, this is going to take a long time. Imagine how long it takes to actually fill a pothole in your street. Now you're actually talking about, completely changing the sort of power generation grid, which means that gas is here for quite a while. That's just a fact. That's the way it's going to be.
Doesn't that mean that you've got gas? You may have gas at the wellhead, but you can't get it into the factory or the home, or that if the grid is the problem. And I have read about this recently, where one or two big customers cannot just go ahead with major operations because of a lack of grid supply.
On the electricity side, the grid is a massive problem. It's going to require probably, the statistics are fantastic. The gas grid is actually quite well developed. It's not going to be further developed, but the gas grid is well developed. However, the gas grid does rely on being pressured. quite a lot of the pipes are getting old. Some of them are wooden. Some of the pipes are actually wooden, and they rely on pressure being keeping them alive. Should any disruption occur in the UK, basically the UK has about 2 days of storage. This is a very important point. There's 2 days of storage. Should the storage decrease, should there be a breakdown in supply, you're actually ending up in a situation where the grid could collapse. Now, the UK produces around 55% of the gas which it uses. And unfortunately, because of the way the government has actually structured the new taxation system, this is now forecast to fall to 30%, which means 70% of all gas will now be imported, which means you're going to rely more and more on liquefied gas. That's the only way that gap can be actually met.
Okay, now can I just put you there for a second, Chris?
Yeah.
You have covered so many points in that that I want to just try and pick off one or two. Otherwise, we'll
of course.
So I get the grid situation and the increased demand with AI and data centers and so on. So the first question clearly as a result of that is it possible for the UK to produce the amount of gas that these demands will put forward in terms of space heating and energy production? You've said in the past that the tax situation, we've all talked about this, but so what about the UK potential production for gas?
The potential is still quite high, but at the moment, as I said, it's only about 55% of the actual demand in the UK is met by domestic production, which means it's importing. So we're already almost half of the gas we're using is imported. It's imported through Norway production, and it's imported through very large LNG terminals, which import basically from Qatar, some from the US, and even occasionally, I believe there's cargoes from other countries, which means that the UK is in a situation where it's already heavily reliant on imports. At the same time, what's actually happening is that because of the taxation system, which is very high, it's got to a point where several companies now, like Ineos, have made it very, very clear that they're very unhappy with the situation, and they're going to the demand basically. So the demand is still there, but the supply will be drastically reduced as new projects don't come on. Within about a short period of time, we're talking about probably only 30% of our gas demand being met by domestic production, which means 70% of all gas will be imported. That's not good for the country. That's not good for taxation. That's not good for jobs. That's not good for balance of payments.
Okay, now, I mean, what I want to do here is to sort of put out this is a key sort of political point to a certain extent. As you see, for a number of reasons, you see the amount of production from the UK coming down. So first of all, it's a taxation thing, and second thing, it's a carbon thing. So on the taxation front, taxation obviously is high, but more importantly, without the tax incentives to develop. And secondly, it's all very well going for a carbon neutral or carbon zero situation. But you're saying to me that, as I understand it, and I believe as well, is that, for example, on 30, 40, 50% of LNG coming into this country, the carbon is zero from Salt Fleetby, but significantly higher from Qatar.
Basically, the CO2 emissions from LNG are 4 times what they would be from a domestic producer like Salt Fleetby. So it's a very inefficient system. You're using a vast amount of energy to liquefy the gas. You're then using a huge amount of energy to transport it, and then you're actually using a load of energy to regasification. that's very, very inefficient. And it's also subject to disruption. Middle East is not a happy place at the moment. The political situation in the US could change very rapidly with exports maybe being restricted. It would take some bad weather with ships, just bad weather, ships being unable, LNG tankers being unable to dock, and you have massive disruption.
I understand that, and I think that it's also fair to say that LNG, which is imported into the UK, only comes into 2 terminals and is distributed through the UK via initially by one pipe. So and just to pick up on that final bit about storage, you're talking to somebody who's been, talking about storage for way too long. Do you think there is the real opportunity? Because I think your point is very well made about blackouts and so on, is that, and we've seen one company recently starting to pick up a bit of storage. Do you think there's an opportunity to do a much more realistic amount of storage than we have at the moment?
It's not just an opportunity, it's essential. At the moment, the sort of storage in the UK is a few days, literally. And if you compare that to Europe, some countries in Europe are talking about already have 90 days of storage, 90 days of storage. Now, 2 days of storage is extremely risky, especially if we are talking about new weather patterns, which everybody seems to be doing. We are talking about, disruption around the world. And only today, I'm reading that it took a couple of divers and a boat to actually destroy the Nord Stream 2 gas line, which is extraordinary. So the UK has to have more storage. And
understood. And I think we now know where we stand in terms of what the UK domestic situation is. What I want to do now is to take it on to where do Angus come into all this, because I think this is what the interview is primarily about. So first of all, putting Angus into context here with the UK energy transition policy and how you fill the gap to a certain extent with potential increases at Salt Fleetby.
Number one, obviously, as we already discussed, the gas is sort of as efficient and low emission as it can be in comparison to all the alternatives for future sort of imports. At the same time, we're also looking at storage. We are definitely going to take a look at how Angus could actually be part of the storage solution. There's a lot of opportunities which are there for storing gas. On the renewable side, we could definitely look at carbon capture. It would be, I think this is something the government has to look at if it's going to try and meet some of the targets which they've set. They're going to have a carbon capture system. Some of the offshore side seems to be looking very, very unlikely now. So I think the government will have to look at carbon capture onshore. And again, Angus can be very much part of that. And of course, Angus will be part of supplying as much gas as possible. We're going to try and increase production over the next year. And we have a number of projects which are already looking into that, one of them being the booster compressor, which will be arriving in December this year.
So excellent. Talk us through the booster compressor, if you would. Plus I know that you're planning to build more wells on Salt Fleetby as well. And
the booster compressor is, we've got 2 compressors working at the site now. We'll have a third one. The booster compressor is basically going to just suck up more gas. That's about as technical as it gets. It's capable of increasing gas production. It's basically a very, very efficient pump. It's an expensive piece of kit, so this is quite a big investment for us. This is about 3-4 million pounds of kit, which is arriving. It'll basically mean we produce more gas, and it'll mean we'll be able to produce gas a lot longer as pressure sort of drops. We're also looking at reactivating old wells. There are some old wells which we would work over, we could reactivate, again, increasing production. And we're talking about drilling new wells, or potentially looking at sidetracks of existing wells. So over the next sort of year, you'll see a huge amount of activity, all orientated towards increasing production. There's a lot of gas still there, and we want to increase production and basically get it out of the ground as quickly as possible.
Excellent. And just briefly on the associated liquids.
Yes, there's quite a. In fact, we are blessed in some ways with a lot of condensate. Condensate, for those who are not in the business, it's very similar to crude. It's actually a lighter form of crude. At the moment, we are limited with the number of places which can actually take this sort of crude, but we're looking at blending this now with existing crude production, and this will actually increase our netback considerably.
Excellent. And so the two final bits, just to confirm from my knowledge, you could potentially use Salt Fleet B as a gas storage at some stage, or would you use, and carbon capture?
Yeah, I mean, it would be obviously there'll be this is part of the government sort of strategy. As we do use gas, as we do sort of actually emit sort of carbon dioxide, we should capture some of that to reduce emissions. And Salt Fleet could be a site which would be used for this very thing. It wouldn't, in some ways, even injecting sort of carbon would, in some ways, even potentially increase, sort of production.
Excellent. So you talked about organic growth in the business.
Yes.
Two of your competitors have been quite successful in inorganic or M&A work, and I think that I've heard you talk about the fact that you would like to do something like that on the M&A front. You've got a team of people waiting to have a look at things. Is that the case?
That's very much the case. I mean, my background is in M&A. I've spent the last 20, 25 years doing M&A, both for BP and all around the world. I think I've worked in every single country on this planet, with the exception of Nigeria. Now, what we're doing now is taking a look at a whole series of acquisitions, which we can do, and mergers. Acquisitions, we're looking at North America and North Africa at the moment. There are a number which we can do. Mergers are something which I feel quite passionate about. And the reason I feel passionate about that is we have about 300 companies which are involved in energy in the UK. And most of them are, and they're at the small end. That's not counting BP, Shell, and everybody else. They're all struggling. Finding finances, in fact, I think Woodmac put it beautifully. If you want to finance something in a small energy company, put it on your credit card, put it on your Amex card. The truth is, they're finding it difficult to find finance. They're finding it difficult to recruit people. Young people don't see the energy business, especially the oil and gas business, as quite the sort of career it was. At the same time, those companies are just too small, and actually keeping a company going is expensive. You're talking about legal fees, you're talking about nomads, you're talking about brokers. So the idea is that we have to start merging. This isn't something that that would be nice to do. This is essential. Companies have to merge in order to gain size, in order to sort of get the right team in place, in order to get the right financing in place. This is incredibly important.
Okie dokie. So what that brings me on to is your well-known views for that Angus in particular shares are significantly undervalued. Just give me a thought about that.
Shares are incredibly low at the moment. I mean, the standard way in which any company is valued is it's on an EBITDA multiple. It can be on reserves. it can be on future NPV. You can value it in, those are the three main, sort of metrics which you'd use. And we are we're a fraction of those metrics. We are literally a fraction of those metrics, which is totally illogical. I mean, and on top of that, no value is being given to the booster compressor, which is about to come online. No value is being given to the additional workovers, which I've mentioned, and the new wells. No value is being given to storage. No value is being given to the additional crude production at Brockham, which we have. No value is being given about the potential growth story. We have an extraordinary team now, which we formed, and we are very capable of taking on more assets and hunting for more assets.
That sounds good to me. Certainly good advert for
I hope
Angus.
so.
And if that doesn't get your story well across, then nothing will, because it is showing that maybe one or two people just don't know what's hidden away and how well you're actually doing. Before we close, we've got a little bit more to do, if I may.
Of course.
Just on the financials, yeah, you mentioned way back in our discussion that one or two things were beginning to come into place. So you're getting your sort of priorities on financials are obviously your cash flow. You're very prudent in terms of financial management. You've got a low cost base in the industry. I can't see many lower than yours, and you're in that sort of position, which would help. Tell me about your priorities on the financial side of the business.
I mean, above all, the more we produce, the more financially sound. So we've already run through that. We are going to be doing everything in our power to increase production at the field. We're also going to take a look at trying to increase some of the crude production. We've already got Brockham up and going, and we'll see what happens with some of the other fields we have. That's every scuff, every square foot is worth money. That's number one. Number two, we've restructured all our finances with a long-term loan, which is a 5-year loan with Trafigura early this year. So we have our creditors are all very, very, very happy. Everyone is. So we basically have sort of a very, very sound basis for sort of our future production. We have a sound basis for drilling some more wells. We have a sound basis for taking a look at some new acquisitions. So the EBITDA is very, very strong. One thing which is dragging us down is we have hedges which were set a long time ago, and they are at 40 pence. Today's price is more than double that. Now they come off gradually. They come off until they stop in July. We're hedging in the second half of next year already at sort of 80, 90 pence. So there's going to be a massive boost in terms of our cash flow in July next year. However, we do have sort of these hedges, which are historic. We can sort of talk about them a great deal, but they are where they are. But overall, the EBITDA is extremely strong. The cash position is strong, and we're going to generate a lot of cash into the future. And we have 200 million pounds worth of gas, and that's without even taking a look at further potential reservoir. We believe that the reservoir is a little bit bigger than we first thought. So we are actually talking about 200 million pounds worth of gas in the ground.
Excellent. And so I'll just wrap on that one if I may. So it's the cash flow is good. Once this hedge, we've all talked about it for long enough. We just have to say it is what it is, as you say, as it winds down. But more importantly, you're in a stronger position. Now, that would normally mean you were going to do one of two things: make acquisitions or diversify in the UK or somewhere else. You've already told me you're looking at those sort of things. I'm assuming that if you find those sort of things, that's where the cash goes. If you don't find those sort of things, or you just feel generally munificent to the shareholders, are we talking about a dividend from Angus one day?
there has to be a dividend. That's what the business is about. So we have the question now is whether we dividend out in the short run, or we use our financial position to take a look at some acquisitions. Mergers could actually be an easy way also to move forward without, just on scale. If we merge with another company which is the same size, our unit costs are going to be literally a fraction of what they are today. So I think there's also the merger side is a very, very neat way forward.
Excellent. So, as I always say, as we come towards as the clock runs down, I wonder, you said it all over the last half an hour about it. Could you just, in the space of one question answering, tell me how you think you would like to see, you and your executive team would like to see Angus in the next 12 to 18 months?
The first thing is we want to see the share price up, and we will do everything in our power to increase that. We want to see some major acquisitions, which will actually double our production, triple our production. We really believe that that's the way forward, and we want to see dividends coming forward for our shareholders because that's the only way we can reward them through growth, but above all, we still have to pay dividends. So we are looking at that. In a year's time, I'd like to see a much larger Angus. I'd like to see us with a very, very strong balance sheet and moving forward on even more acquisitions and mergers.
Excellent. Without that hedge, I nearly put a swear word in there as well. But without that,
without the hedge, we'll only be doing very, very dynamic hedging, not years into the future.
Excellent. Chris, thank you very much for your time this morning.
Thank you so much.
It's been a great pleasure. So my name's Malcolm Graham Wood. Today my Call London interview has been with the non-exec chairman of Angus Energy, Chris Zielicki, and I've got that wrong again, but he'll correct me. But Chris, thank you very much for your time. You've given a really good rundown on Angus, and also you've given us a really interesting look at the UK domestic gas situation, which, if it was all sorted out correctly, has still got lots of potential.
Absolutely.
Thank you very much indeed for your time.
Thank you so much. Thank you. Bye-bye.